Help to Buy launched in 2013, when home ownership among young people had hit rock bottom. On paper, it looked like salvation. The government would loan you up to 20% of the property price, interest-free for 5 years. All you needed was a 5% deposit, and suddenly that impossible dream became reality. Sounds brilliant, right? But here's what nobody told you. Help to Buy wasn't designed to make homes cheaper. It was designed to prop up the housing market and keep developers building. The scheme only applied to new builds, not resale properties, not fixer-uppers, just brand new developer flats and houses. And that's where the trap was set. The government created a ready-made customer base, and developers saw their opportunity. They knew buyers were walking in with artificial purchasing power. They knew the government was covering 20% of the price. So they did what any profit-driven business would do. They raised prices. Those shiny new flats came with what's called a developer premium baked into the price tag. We're talking 10% to 15% more than similar properties next door. Sometimes even higher in London and the southeast. And Help to Buy buyers, they didn't notice, or they didn't care, because finally, after years of saving, they were getting on the ladder. But that ladder had missing rungs, and the fall was coming. Here's the thing most Help to Buy buyers didn't realise. They weren't buying in a free market. They were buying from developers who controlled the price, the product, and the terms, with virtually no oversight. Let me give you a real example. A one-bedroom flat that would have sold for £230,000 in 2012 was suddenly going for £260,000 by 2015, with no major upgrades. Why? Because developers knew the buyer wasn't footing the entire bill. That 20% equity loan made people feel like they were spending less. But they weren't. They were just borrowing more from a different source. It's like putting a purchase on a second credit card and pretending it's free. And there was zero incentive for developers to keep prices reasonable. Why sell a home for £200,000 when the government's essentially underwriting £240,000? This is where that developer premium really kicked in. Buyers were paying 10% to 15% more than equivalent resale homes, sometimes even more in hot markets. And when the honeymoon period ended, that's when the real problems started. Help to Buy loans were interest-free for 5 years. But after that, the government starts charging 1.75% interest on the equity loan, rising every year by inflation plus 1%. For many buyers, this kicked in at exactly the wrong time. Maybe they'd started a family, maybe they'd lost income, or maybe mortgage rates had climbed like they did catastrophically after 2021. Suddenly, that free 20% loan was costing hundreds of pounds per month on top of their mortgage. And here's where the trap really slammed shut. If they wanted to sell to pay off the equity loan, they discovered something devastating. Their property hadn't gone up in value. In fact, in many cases, it had gone down. Because once the new build sheen wore off, those flats and houses dropped back to their true market value. Often £10,000, £20,000, even £30,000 lower than the original purchase price. Which meant they couldn't sell, they couldn't refinance, and they were stuck with an expensive loan on a home they no longer wanted. Welcome to negative equity. But it gets worse. Help to Buy had one massive psychological advantage. It made people feel protected. If the government's involved, they thought, surely this must be safe. But that illusion masked how high risk the scheme actually was. In a traditional mortgage, you build equity as you pay it off. With Help to Buy, you only own 75% of your home at best, and that's assuming ground rent, leasehold fees and maintenance charges aren't eating your budget too. And remember, the government owns a percentage, not a fixed amount. So if the property value goes up, great, you owe them more. If it goes down, you're still on the hook for your mortgage, but now you've got no equity left. You're sharing your biggest financial asset with a partner who never contributes, never shares risk, and gets paid first when you sell. It's not a gift, it's a deal. And it left thousands of buyers financially boxed in. This wasn't just a personal finance disaster. It distorted the entire housing market. By concentrating buying power into new builds, Help to Buy created an artificial spike in demand in one narrow corner of the market. Developers ramped up production, but only of homes that fit the scheme. Tiny flats, cookie-cutter starter homes, not family-sized properties, not long-term investments. And because prices were inflated, regular buyers couldn't compete. Non-subsidized purchasers were pushed out of the market entirely. For a while, everything looked rosy. Home ownership rates ticked up, construction boomed, political headlines glowed. But underneath, the cracks were forming. When Help to Buy finally closed to new applicants in March 2023, thousands were left holding homes they couldn't sell. Because here's the brutal reality. No one wanted to buy a second-hand Help to Buy flat. Buyers couldn't use the scheme again, and the inflated price didn't make sense anymore without that government equity. The result? Stagnation. Flats sitting on the market for months. Homeowners forced to slash asking prices by tens of thousands just to get offers. Some tried renting them out, only to discover they couldn't cover the mortgage plus equity loan charges. These weren't stepping stones. They were financial dead ends, and the impact is still being felt today in London, Birmingham, Manchester, cities where Help to Buy flats flood the market. Unsold. So let's be honest. Who actually benefited from Help to Buy? Because while first-time buyers were sold a dream, someone else quietly cashed in. The real winners? The big house builders, Barratt, Taylor Wimpey, Persimmon. These weren't just construction companies. They became corporate machines engineered to capitalize on government-backed demand. The moment Help to Buy launched, their stock prices soared. In 2013, Persimmon was building homes at an average price of just under £180,000. By 2020, over £240,000. Their profit margins exploded. Persimmon paid their CEO a bonus of over £70 million in 2018 alone. Meanwhile, the people buying those homes were left with properties that instantly depreciated. Mortgage lenders won big too. Bigger house prices meant bigger loans, more interest, more fees, and they had zero exposure to the equity risk. Estate agents enjoyed the ride with more transactions and bigger commissions. Everyone in the property chain profited, except the people who were supposed to be helped. But perhaps the most strategic win went to the government itself. Help to Buy wasn't just economic policy, it was a political tool. It gave ministers photo ops with smiling young couples. It let them claim they were fixing the housing crisis without building more social housing or tackling the real affordability problem. During elections, the narrative was perfect. We helped 300,000 families get on the ladder. Except they never mentioned how many ended up stuck halfway up, unable to move, remortgage, or sell. Selective success. And here's the darkest part. While the scheme was designed to phase out by 2023, its effects are still distorting the market today. Thousands of homes built with inflated Help to Buy prices are struggling to sell. Without the scheme propping up demand, developers have scaled back, pulling out of some markets entirely and focusing only on ultra-profitable regions. Which means the supply crisis that Help to Buy was meant to solve. It's actually getting worse. Fewer homes are being built. Affordability is still broken, and entire generations are stuck renting or trapped in negative equity. So ask yourself, was Help to Buy really designed to help you? Or was it a short-term fix that gave big players a long-term payday while leaving everyone else holding the bill? Help to Buy did one thing extremely well. It transferred risk from institutions to individuals. It propped up a broken system with shiny packaging and emotional marketing. And now in 2025, we're seeing the result. Thousands of buyers trapped in overpriced flats, a distorted housing market that hasn't recovered, and a generation learning the hard way that government help doesn't always mean safety. If you're thinking of buying a home, especially a new build, you need to understand what really happened here. Because schemes like this always come with strings. And those strings, they're wrapped around someone else's profit margin, not your future.